Okay, in today's video, we're going to discuss trading the trends of the Forex market with using some simple moving averages and some other tools also. This article is brought to you by ForexEarlyWarning.com. So there's a lot of benefits of trading the trends of the Forex market. If you are scalping the Forex market right now, you're trying to make maybe 10 pips or something like that if you're scalping. But if you move to the H4 time frame or larger, you're going to trade less and you're going to have a lot more pip potential per trade. I think Forex traders understand this. They're trying to move away from scalping, but they need a better system to do that. So step one would be to set up the moving averages. If you click on this link right here, we're going to show you some simple exponential moving averages that you could set up on the 5 and 12 time period. Click on that link. You'll come to this article here, and here's the setup instructions. Very simple trend indicators, moving averages that you set up, but you set them up by individual currency. So you set up all the US dollar pairs together in a group, all the euro pairs, etc., for the top 8 currencies in the market. Next thing you want to do is locate the trend. Remember, to locate the trend, you can use a technique called multiple time frame analysis. You can learn all about it by clicking on that link right there to another illustrated article that talks about multiple time frame analysis. With multiple time frame analysis, you always look for trends on the higher time frames, and then you trade in the direction of the trend. Sometimes you can have trends on the higher time frames here that last for weeks and months. So always stick with the higher time frame trends when you're using exponential moving averages and the trends of the Forex market. The next thing you want to do is filter the trends with support and resistance levels. Let's look at an example here. This is the British pound Aussie dollar. So you could set a price alert right there, an audible price alert, okay? 1.7700, right about there. And when it breaches it, you'll get an alert that it's dropping through the support. This is the W1 time frame, so you've got a lot of potential here. This is 800 pips of potential here because you're trading in the direction of the higher time frames and trends with these very simple moving averages. So when the British pound Aussie dollar breaks this support level, you'll get an alert. Then you can go check a great entry tool we'll show you in a moment here. So after you break this support level, you know the direction of the trend, which is down. You know that you've broken the support. Now you have to verify and locate the entry point. You set your audible price alert right there, and when it breaks it, here's your pip potential. Well, we got a great tool that you can check out on our website. It's called the Forex Heatmap. This is a signal to sell the pound Aussie, along with several other pound pairs also. The British pound is weak. You can see the GBP is the base currency, but it's a cross currency on the euro pound, so this one would have to be rising. So you can see the British pound is weak. If the pound Aussie breaks this support level and you want to start taking out some of this for some profit here, the British pound would have to be weak or the Aussie dollar would have to be strong. So this is a valid entry signal. And once again, if the Aussie dollar was consistently strong, which you can also see on the Forex heat map, that would be a valid trade entry signal for the British pound Aussie for a sell. And remember that these signals work the same way for 28 pairs. We're just using one example here. So remember, sometimes the market is not trending. Sometimes the market is ranging or oscillating. That's fine. You can click on this article right here and it'll show you pairs that are ranging and oscillating. If you look at that article, see in this case the market is trending. This pair is ranging down. Excuse me, it's trending down. So you're looking to catch this area here for your pip potential. But sometimes the market is ranging and oscillating between support and resistance. Okay, so it may not be possible to trade with the trend. Well, check out this article here and you can learn more about ranging markets. Okay, range trading strategy, trading between support and resistance. It gives various ways of doing that with the same entry management tool. So you want to set up your moving averages. You want to locate the trend, decide what time frame you want to trade from. Hopefully be the H4 time frame or larger, D1, W1. You filter the potential trade with support or resistance. Then you set your price alert and your price target. Then you verify your entry point with the Forex Heatmap. This is how you trade the Forex market with moving averages. This is much different than using technical indicators. This is completely different from scalping, and it's a much better technique for capturing more pips because you're using the higher time frames. So this is today's article. This is Trading Forex Trends with Moving Averages, and this is from forexearlywarning.com.